So in this session, we'll be seeing on the prerequisite of financial modeling, understanding the financial statements. So when it comes to investment or a company stock to be bought, it becomes the responsibility of the analyst to give a proper seek-through in elements of financial statement. To build a complete financial model, we have to analyze the company's historical performance. This can be done with first by analyzing the financial statements and making projections of their financial metrics, and next by doing the valuation with the help of the projected financial metrics. Understanding financial statement requires the components that we have to understand. So this has to be done stepwise. First, making a financial model is the basic building block by understanding the statements properly. So what are the components that we have to understand? First, you have to understand the concepts of the financial statement. Then we should know something about the historical analysis of the financial statement. Then we have to do some projection through the financial metrics, and we have to interlink the model with the financial statements. So interlinking the model with this financial statement is nothing but we have to check what will happen if one element will go up and other element will go down. So what is the impact of a balance sheet element on income statement, or what is the impact of say profit on profit? What is the impact of profit, an element on a balance sheet, or it is affecting a cash flow? So these are the part that we have to very carefully interlink the model, and we have to check what are the variables will start moving up or moving down. So this ensures us to build a complete financial model. Now, but getting to know the key components is very important. These 6 components has to be looked into. So these are the 6 components that we have to look into. First is the income statement, the cash flow statement, balance sheet, depreciation schedule, working capital, and debt schedule. So these are the things that we have to build with the help of the financial models, right? With the existing information which is available in the annual report. Now, the income statement, the cash flow statement, and the balance sheet are the significant one, right? The other 3 will play a supporting role. So supporting role in the sense how the variable will get affected. So one by one. Next, we have to concentrate on the income statements. When we get into the income statements here, so one by one we have to see. First, we'll be seeing about the income statement, right? So when we talk about income statement, so income statement is a profit and loss statement, and it's a component of financial statement used to present revenue, expenses, which shows you the financial result of a company over a specific period of time. So normally the choice of a specific period of time or the accounting period is decided by the management. So typically we have assumed that the accounting period will be for 1 year. It may go for 2 years also, depending upon the management decision they take, right? And we should know the taxes on sales made can be reduced by the expenses incurred while generating those sales. So we talk about profit is equal to revenue minus expenses. So, okay, what is a profit? Profit is revenue minus expenses. Normally the profit is also charged the tax, right? So company is taxed on profit. So we can say net income is equal to profit minus tax. So expenses vary from company to company, but as an analyst we have to engage proper analysis by looking into income statement line items. So these are the line items that we have to categorize as an analyst. We have to go in a very much in-depth way of putting through how it actually works. So we have the categories over here: revenue, which is sales. Then you have to see something on the cost of goods sold, operating expenses, other income, depreciation and amortization, interest, taxes, non-recurring and extraordinary items, and then distribution of profits to stakeholders or shareholders. So as an analyst, we have to categorize the line items which will be helpful for doing proper valuation of the company. So these are the metrics that we will be taking as an input for our valuation purposes. So in the next part, we will be delving into the individual line items working in depth.